It's all good. We're live. Hi, Igor. Welcome to Venture with Grace.
Thanks for having me.
To start the show, I would love for that audience to get to know you a little bit more. So like the last job you had before starting your own fund was like you were an investor at DataRobot, and then you were like the SVP of Corp Dev. And maybe we could talk about like, what were some core lessons that you've learned early on in your career? And then also, but by the way, you were like the managing director of Intel Capital for multiple years, for like over 16 years. Maybe we could talk about like what were some core lessons that you've learned early on in your career, kind of shape you into who you are today?
Sure. No. Well, you kind of summarized the path already, so I won't repeat it. But yeah, I've been investing, operating kind of broadly in the data and AI space for almost 20 years now.
Mm-hmm.
It wasn't always called AI. Big data, data analytics, machine learning, data science, you name it. Yeah, like you mentioned, started my investing career at Intel Capital.
Mm-hmm.
Spent more than a decade there, doing a bunch of different things. At the back end of that was kind of running data and AI investment practice,
Mm-hmm.
and did a bunch of investments. And then one of my investments was this company called DataRobot. That's where the dots get connected, and was an early investor in the company, on the board, and then really got an operating itch, and thought that just being an investor without having really deep operating experience was not optimal.
Mhm.
And thought, building an operating muscle would make me a better investor. And so ended up joining DataRobot full time.
Mhm.
The joke that the founder and former CEO of DataRobot, who is now my partner at the fund, the joke he likes to tell is that he thought I was like the most difficult board member. And so the way to get me off the board was to get me to join the company full time. But anyways, yeah, I spent a number of years at DataRobot helping run corporate development and strategy. We did lots of acquisitions, raised a bunch of capital. And then about 3 or 4 years ago, both me and my partner decided to start a venture fund. And so here we are.
Love that. I wonder, maybe we could talk about like when you were back in time, you helped raise like over $500 million at DataRobot. What was your kind of like fundraising strategy? Because I think like for our founders, a lot of them is like early, I guess like a lot of listeners were early stage founders, so they haven't raised 500 million yet. But like what was the journey like when you guys were doing like the fundraise? And then like I know that you led the Series B investment into the company, so I guess like all the fundraising work done, like the other fundraising work like done afterwards. So I guess like from compared to like when you're the investor to when you were the operator, what were something that shocks you?
Yeah, no, in terms of fundraising, I mean, DataRobot was really a really successful company during that period of time. It really created a category of automated machine learning.
Mhm.
I really was a leader of helping large enterprises building and deploying machine learning pipelines.
Mhm.
Company was growing extremely quickly. It was probably at that point of time one of the highest growth companies out there. Of course, nowadays companies are growing at a whole different cliff. But back, if you think back on 2012 when the company was started, all the way through, early 2020s, the DataRobot growth rate was absolutely best in class in the category.
Mhm.
And so when you have a company that created a category that grows extremely fast, has tremendous customer base, usually then fundraising becomes relatively easy. That's actually probably the easiest part once you have a company that's on that kind of trajectory. So yeah, we did raise a fair bit of capital, but it was really a function of companies just executing really well again during kind of that period of time.
I wonders like what were some lessons that like I guess like when you were running the corp dev, like what kind of company do you guys strategically investing in? Because I think I saw that like you guys invest in Cursor. Maybe we could talk about like is
Yeah,
that
different Cursor.
Oh, I was like, wow, you guys
Not the today's Cursor.
2018. I'm pretty sure Cursor was started like 2 years ago or something. So
Yeah.
I was
It
like,
was a very different company. It was also called Cursor. They were focused on building data catalog. It has nothing to do with today's Cursor. But yeah, our strategy, the reason we made about 10 acquisitions when we bought DataRobot, And the basic idea was that we thought there was an opportunity to really consolidate the market in a way that really automates as much as possible and streamlines as much as possible this entire process of building a machine learning model. And if you build a machine learning model or AI model nowadays, there's just so many steps one has to do in that process. And we thought there was an opportunity to really build an end-to-end platform. And we used M&A as a tool, as one of the tools by which we were building that. And so in case of Cursor, they were doing data catalog, which was a key component of the entire pipeline. So yeah, that was the strategy. The learning was that M&A is really, really hard. And the actual deal making is the easy part. It's fun to do the deal and find great companies to partner with and structure a deal and do the deal. It's a fun part, and that's the easy part. The hard part, that's also not as much fun, is to actually make those acquisitions work as intended. And that proven to be, it's true. I mean, it's kind of true, I think, across all acquisitions, but I guess until you try to do it yourself, you don't realize just how hard it is. You kind of think it's hard in theory, but once you actually doing it, you kind of get appreciation as to why most acquisitions actually fail. It's actually very rare that acquisitions succeed, whether it's a small acquisition or a big acquisition. Track record of like successful M&As overall isn't great, and you can appreciate as to why that is, because integrations are really, really hard. Even on the scale of our company at the time, which was a sizable company but a relatively small company. Even on that scale, it was really hard. And I think it just gets harder. The scale gets bigger.
I wonder, so like, let's talk about the 10 company that you have acquired, right? So like, when back in time, like, I know that you guys were trying to streamline the machine learning building process. And like, I guess like within internally, like, is that just like the CEO will be like, hey, we need this type of company. Can you look into like, acquire this? Or like, do you have to talk to the whole team and then do an evaluation on like, if we're building this product that's going to be costing more versus like if we just acquire somebody, like what, or like maybe just talent acquisition? How do you do the mental math on like these different step niche of like acquisition?
So in our case, I mean, Jeremy, who was the CEO at the time, had a very clear vision as to what does the end product have to look like and what were the key capabilities that we needed. So he had a very clear vision that kind of guided us towards where to focus and where to look for opportunities. I think when you do that kind of job, probably the most important thing is to work extremely closely with the product team. So like the head of products almost has to be like your brother. That you can't get anything done without like really deeply understanding the product roadmap, product strategy, and working very closely with the product leaders to like understand the companies, evaluate the companies, etc. So I think only chance to have a successful M&A strategy is to be extremely tight and close to the product teams. And I was lucky enough. I had a great partner who was leading products at the time at DataRobot, and we've spent a lot of time together looking at things.
For sure. I think the CPO of DataRobot was on our podcast, but I'm assuming it's a different person back then. So when you're thinking about the product itself, like I guess like when you guys are thinking about like building or versus buying, how do you kind of like evaluate the strategy? And then like when you're, let's say when he say, hey, we need someone who's working on the context and memory layer of data, and then like how, like, do you just immediately go to like the early stage, like seed, Series A, or like do you kind of like look at the market and then like how do you evaluate, or like how do you even know who wants to sell? Because the problem is like if they want to, like the people who actually are selling their company, they're probably not good asset to buy. But how do you kind of like evaluate who will be a great acquisition target?
Yeah, that's a really good question. So the build versus buy is an interesting kind of framework that I think most companies use when they make those decisions. We actually thought about it a little differently. So the typical acquisition we would make would, generally speaking, be a team that have built that had a deep insight into a particular category that we were interested in, build some type of technology and product that was really good, but maybe was not getting like tremendous commercial adoption. Maybe because they just were not, they didn't have the distribution capabilities, or maybe it took a little bit longer than they expected to build the product and technology. And so maybe the investors were getting a little tired and they couldn't raise the capital to kind of continue. There were different circumstances, different situations. But generally speaking, they were great teams that built an amazing technology and product, but for some reasons did not light the world on fire with taking it to market, right? And there's lots of reasons why that can be the case. And so when we were thinking about acquiring this kind of teams, almost very rarely, only maybe in one case out of like 10 acquisitions, we actually used the underlying technology that we bought off the shelf. But what our thesis was is when you have an amazing team that spend years thinking about the problem, and maybe spend years building a product, and they learned about all the mistakes they've made while building it. You bring this team in and you combine that experience with our company's knowledge and experience in the space, and you basically ask them to build this again, but now in the context of let's say DataRobot. The second time you build something, you probably build it 10 times as fast and you make half the mistakes, right? And so that expertise of having built a product, even if you didn't actually use the product of just as is during the acquisition, was where all the value was, is the experience of doing something, right? And so build versus buy wasn't really a consideration because typically we would still build, but using the resources and knowledge and experience that we bought.
Oh, I love that. So, but I guess like, so how do you offer them a price? Because I feel like the problem is like, for these like it's kind of like talent acquisition, right? Typically it's a talent acquisition. You're acquiring the expert to come into your company. So how do you make sure that they're cheaper than like, you're hiring someone, or I guess like not cheaper, but I guess like at an adaptable price, right? So also another question is like, does the budget coming out of the talent market, or like the talent team on your team, or like does the budget come from just the team in general? Like, so for these acquisitions, like how do you evaluate how much to pay these companies?
Yeah, that's a little, it really depends on different situations and different scenarios are always different. The goal is to pay a reasonable price, a fair price for the asset. And again, the asset could be the technology, the IP, the product. The asset could be the team and their experience and their learnings. And it's a function of many things. It's a function of kind of the company and what have they accomplished, how much capital they have raised, what they have accomplished today. But then, if you're just acquiring a talent, it is a trade-off between acquiring a talent that has deep experience versus hiring a talent that has to gain that experience. And there's a trade-offs there. So the price that you want to pay, it's a combination of many factors, and you just try to find something that motivates the team on a go-forward basis. That's probably the most, again, because we're mostly buying the team. The most important component of the deal is ensuring that the team is fully motivated on a go-forward basis. And then you try to find the structure that's reasonable for investors in the company and other stakeholders. But the most important part of the deal is kind of how do you motivate the team on a go-forward basis and ensuring they're properly and fully motivated to contribute to the new company.
For sure. I want to, maybe we switch gear a little bit to talk about your current venture in Cortical Ventures. So you started the venture arm / like you started the venture fund with the former CEO of DataRobot. Maybe we could talk about like, how do you guys decided to like do just like fully spin off the company, and then like also like since you guys invest in some really superstar projects like Fall AI, which is like we recently had their competitor Runware on yesterday, and then they said great things about Fall AI. And maybe we could talk about like the investing strategy and the fund in general.
Sure. Well, the reason probably the first part of your question was why did we choose to like start a fund, and like why did we think the world needs another venture fund, right?
Yeah.
Why does the world need the venture fund number 3021? Our thesis was actually relatively simple once you articulate it, but I think still fairly rare to find kind of in practice. So our first observation was that, also based on our experience of having raised a bunch of money and DataRobot and my experience of investing before that there was relatively little, whether it's in the founder community or especially in the venture capital community, there was very limited practical experience with AI.
Mm-hmm.
And that was true, back when we started the fund in early 2022, before like ChatGPT came out and before this kind of current massive AI wave.
Mm-hmm.
But AI was always kind of a popular category to invest in, even before the kind of ChatGPT. Nowhere near the level of excitement that started since like ChatGPT. But we have observed there was very limited experience, like practical hands-on experience with building products and solutions in the AI space.
Mm-hmm.
And it turns out that it's a long journey between putting some cool, sexy demo on Twitter or acts of AI doing something magical and getting lots of likes and going viral. There's a long road from that to actually getting this thing or whatever application to do something useful
Mm-hmm.
at Bank of America
Mm-hmm.
or any other large enterprise or large company. That's a long, painful road. And we thought very few people had experience of traveling that road, especially in the VC community.
Mm-hmm.
And we thought it was a key thing that's missing is this really practical hands-on experience of building and deploying AI products and really building an AI company. So part of our thesis was that if we were to offer the product, quote unquote, to the founder that kind of combines this deep hands-on experience with building and scaling AI products and building and scaling AI companies, then like the best founders would be interested in working with us.
Mm-hmm.
That was really the basic premise. And I think that thesis was true then. And as AI became kind of really the only thing that anybody's investing in nowadays, I think that distinction became even more critical and more important than it was when we started.
For sure.
And the last piece of the thesis that's I think really important. What we also thought was important is that it's not just the fact that maybe we've like built and scaled the AI company, years ago,
mm-hmm.
or any company, but we thought it was also important to invest while building. And one of the things we've done is we also started 2 companies that my partner Jeremy is actually running full time. They're actually building companies in the areas in which we also invest in. And I think the value we get from that, in terms of our ability to make good decisions, attract the best founders to work with us, is priceless.
For sure. Maybe we could talk about the track size and then the stage that you guys are interested in. And then obviously you guys invest in like the 4 major category, or like 3 major categories, like physical AI production gaps, and AI for good. Maybe we could dive into each different sector on like the different trends you guys are seeing as well.
Sure. Yeah, the check size, that's a simple question. So we typically lead pre-seed rounds.
Mm-hmm.
Those categories you just mentioned. I'll go deeper into the categories. We write checks anywhere between $500,000 to $3-4 million.
Mm-hmm.
Usually as a lead investor, even though not always, but generally speaking. And happy to be the only investor in the company. Happy to partner with other folks. Doesn't really matter to us that much. Mm-hmm. That's from a kind of portfolio construction and how we invest. In terms of categories, you mentioned three categories that we invest in. So let me just go through them. The AI production gap is somewhat clear, right? It's that what I just said earlier. It's kind of recognizing that it's a long, painstaking road between the demo and the production product, and we're very focused on investing in products and companies that are helping bridge that gap, and enabling AI applications and AI models to go into production in real-world environments. And this is where we have deep expertise of having done that with thousands of customers before that. So that's category number 1. Physical AI is also something we're extremely excited about. Partially, we're building a company in the space, Neo Cybernetica, but also really focused on, and our thesis in physical AI is actually not so much investing in robots. So physical AI people, it's really another name for robotics at the kind of basic level. But our strategy so far has been we have not invested in any companies building robots or choosing a form factors, humanoids, or anything else. But really focused on companies that are solving really core unsolved problems in robotics and in physical AI. Core capabilities, core building blocks of enabling robotics to deliver on its promise. And there's so many unsolved problems, whether it's things like robotic hands and dexterity, or a variety of sensor modalities, and of course AI capabilities. That's where we focus with that. For example, since you're going through the deck, for example, Kyber Labs is a good example of a company in that category that's building a robotic hand. They just recently put out a bunch of extremely impressive videos of their robotic hand doing really insane things. But like a robotic hand is one of the hardest things in robotics. Like Elon also says that, and anybody who has practical experience in robotics really knows that very well. So that's the second category. And the last one, AI for good. I'll explain what we mean by that. Like if I actually were to ask you, what has been, if you think about all the applications of AI from beginning of time, so let's say last 20 years, what application of AI do you believe has created orders of magnitude more economic value than any other application of AI? What do you think that is?
Like laptop.
No, the answer is it's for AI to figure out what content you really like.
Oh, okay, yeah.
Or you love that content to keep you addicted or engaged, and then sell you some ads in between. That has by far been like people literally build trillion-dollar companies.
For sure.
That, right? And so that's by far been the biggest application of AI. Like anything else doesn't even get anywhere close to that. But you can make an argument that even though that's been by far the biggest, most successful application of AI, the impact on humanity is questionable at best. Right? But clearly there's something super powerful about these technologies that can like hack our brains, turn us into zombies, and get us to like scroll TikTok for 3 hours. Right? Clearly there's something really powerful about these techniques. So we're very interested in companies that are building products and services that are using some of that power, some of those techniques, but building products and services where the value accumulates to a user, not to the platform. Right? And so again, clearly AI can influence our behaviors. So can we leverage it to influence our behaviors in a way that's good for us? Right?
For sure.
The core thesis.
I wonder, so like when you're, so for example, in the AI for good space, you guys invest in the geospatial AI. Like maybe we could talk about the different trends in these different subsectors, right? So
when I say AI for good, so that was like one category I described is what I just described. We're also very interested in on the intersection of AI and defense, and specifically how we leverage AI in a defense tech space to enable accuracy, efficiency, things like that.
I actually, so like I was looking at the Kyber Labs. So like I actually also invest in a company that's in the robotic hand space. So I think the hard part is like to make sure that it's just like picking up that most like accurate stuff. So they're doing robotic hands for the hospital. So like basically essentially it's like, can you pick the right medicine, like not breaking the jar since the jar is like tiny, like glasses and stuff like that. So like nurses spends like 30% of their daily life into like picking up one stuff from one room to the other. When you were I guess like looking at the space, for example, the robotic hand space, like what were the things that you feel like were the most like biggest like differentiator from like the founders that you have backed, and like what were some like kind of like I guess like what does the evaluation process look like for you when you're looking at a space like physical AI?
Yeah, I'm gonna. If you're interested, I'm gonna send you while I answer your question, I'm gonna send you a link a video that you can put up on the hand if you're interested. I'm just gonna quickly email it to you.
Oh, you can also present. You can present.
Oh, I can present. So I'll just email it to you, so I don't tinker with it too much. I just email it to you, so feel free to put it up. But to answer your question around what's our selection criteria and how we evaluate companies. So we invest very early, right? When we invest, literally there is oftentimes it's just it's definitely pre-revenue. Oftentimes it's even pre-product. Maybe some prototypes, right? So there's not much to go on at that stage in terms of decision making, but there is a few things that I think are very, very important to us. And the first thing that's very important to us is, and it's cliche and everybody says that, but of course the founding team is the most critical part at this stage of investments. Everybody says that because it actually happens to be true. So But the way we think about the founding team is really a couple of things that we care about. First, again, somewhat obvious is like we try to connect the dots between why is this team the best team to build or solve the problems that they perceive need to be solved. Kind of what's in their previous experience connects the dots that kind of led them to start this company. And one of the challenges I think right now in the AI space, because the space is so hot, it's so easy to like start a company. Right, it was almost like risk-free in the sense that it's relatively easy to raise this initial capital, and so as a result, there's lots of people starting companies, which maybe is a good on some macro philosophical level. A lot of people start companies, but in terms of choosing companies, it creates a challenge because you're trying to find the founders who are starting the company not just because the space is hot, and not just because it's easy to raise money, but because they're so passionate about the problem they're solving. They would start this company no matter what, even though like nobody would invest in the category. That would say like if it would even be like impossible to raise money, they would still start this company and they've just figured it out. Right? That's the kind of founders you really want. There's people that are doing it because like the space is hot, it's easy to raise money. All my friends are starting companies. I see all these crazy rounds, people raising billions of dollars, and you think that's what it takes to start a company. Then you start, and when times get tough, that's an example of a robotic hand. That I think is if you know anything about building robotic hands, you would know how impressive and how difficult it is to do what they demonstrate. And the speed is all in real time, just FYI. So, anyways, so that's super critical and super important for us is to really kind of go as deep as possible to understand why these founders are starting this company.
What are, I guess, like some trends that you feel like are really interesting in these like subcategory you just mentioned? So, for example, like AI for good, or the defense sector that you're interested in. Maybe let's call it like top 3 trends that you predict for like 2026.
Well, the trends are kind of is why we're investing in those companies, because we have some thesis on it, which I guess you could call trends, or our belief in what the trends are. So in the AI for good category, we generally believe that like humans are just getting like this idea that when you on social media, that's famous saying, you're not a customer, you're a product, and the platform is a customer. I think people are starting to get a hang of that and like starting to recognize how disruptive this can be to their lives and to their relationships and to many other things. And I think people are desperate for an alternative that they actually that they think that makes them feel good about how they spend their time on these categories versus makes them feel like bad that they just wasted 3 hours, where they get real value to them personally, not just because they wanted to waste time and got sucked into through some algorithms. But I think people are desperate for companies that using this power of AI and using these algorithms and optimizing those algorithms that decide what we do next or what we see next in a way that creates maximum value for the user, not just keeps them addicted and engaged to the platform. So we think there is going to be increased demand and interest in this, and figuring out what product, because I think people are starting to like this a little less, especially when it comes to children and kids, but also adults. I just think there's a lot of demand for something that kind of changes the trajectory of like that's generally like you could argue with if you look at the history of like social networks, because every generation we seem to be getting like dumber and dumber. Right? Like we started as like reasonable useful like Facebook feed back 15 years ago. Now we're down to like 7 seconds videos on TikTok. So with every generation we seem to be getting like dumber and dumber. And so it's hard to imagine something like dumber than like TikTok, but I'm sure somebody will come up with something. And so how do you change that trajectory in building product and services that kind of revert? Like I think that's a key trend, and we're like really interested in that.
That's really interesting. I feel like nowadays, like I guess like the other part I'm curious about your thought is like, when you were looking at maybe we could use like fall as an example, right? I feel like fall is like generative media space, and then it's like improving the developer experience. Maybe we could talk about like how do you find the company, and then like what was your thesis around there?
All right, so FAO is a super interesting story, and I think it's been public, so I think I can talk about it because I think I saw other investors talk about this publicly, so I think I can talk about it. When we invested in FAO, we were part of their pre-seed round. I don't know how well it's known, but the company was working on something completely different. So the team came from one of the founders came from Coinbase, and with Coinbase they were building data products for their internal applications inside Coinbase. So when FAO first started, and when we invested, company was building data products for data science teams, building primarily for fintech vertical. That was the original thesis, is that the stuff they built at Coinbase, they thought would be useful to other fintech companies. And then, of course, credit to the team and what they've been able to accomplish is to, really pivot the company to something that obviously have become really, really successful. And I wish I could tell you that I was like super smart when we first invested, and I knew exactly they were going to build this inference platform for generative media and became one of the most important companies in the category. Of course, I wish I could say that. Truth is, I can't, and it just tells you, but goes back to what this amazing teams are capable of when things go well. And it's very hard, very few pivots work out. And this is really an example of the one. And I'm sure the story, I'm sure the founders will tell this story one day themselves. But I think it's an insanely amazing story. If you back the right teams, they'll sort it out and they'll find the way and find the place to win.
I guess how did you discover the founder? So did the founder pitch you, or did you see them building something interesting at Coinbase, then you reach out?
I think they were solving a problem. So I think we got introduced to the founders through the network, and they were solving a data science problem that we were very familiar with because of our times at DataRobot. And we thought their backgrounds and their expertise positioned them very well to solve this problem. And build really a data product that needed to be built, and that's why we made that. That's why we chose to partner with them. And I think they did build some early versions of that, but then quickly, when ChatGPT came out and some early generative models came out with stability and some early versions of Sora, they quickly thought that they had some unique skills and experience of building infrastructure products that can really make a difference in that space, and they didn't hesitate to pivot the company, and the rest is history. So, and we've done extremely well since then.
I wonder, so I guess when you're picking, so maybe we could go category by category. So you mentioned you feel for the AI for good sector, it's people will start using less, it's people trying to be less hooked to the content itself. But what about physical AI? So I know that so I feel I would go to these deep tech demo day, and then everybody's building different drones. What are some kind of how do you kind of separate what you invest versus so for example, you guys invest in a smart the glasses, and then there is different other type of companies. Why don't we talk about the thesis behind the physical AI space?
Yeah, no, that's a really good question. So our core thesis is the reason we're able, I think, to effectively invest in the space is because we're also building a company in the space. And I think the level of depth and insights you get from actual having hands-on practical experience building in the space and using this technology is irreplaceable. So I'll give you a specific example. Let's say you want to invest in robotics. There is no experienced robotics investors that have been successful in investing in robotics. They don't exist. There hasn't been any proven success for robotics companies yet that have, there's been lots of exciting companies, but nobody has built and exited multi-billion dollars robotics companies, or very few have, right? So no investor in the world that's investing in robotics is an experienced robotics investor. So they don't exist. Everybody's learning. Now, if you're looking at an early stage company and you explore, you're trying to evaluate them, how can you evaluate? So what do you have to go on? The only things you have to go on is maybe they'll show you a video of robots doing backflips, right? And maybe like the team has good impressive experience. And if you just like invest in robotics, that's really all you have to go on. There's not much else. And our key thesis evolves from the fact that we're also building a company in the space. And I think that gives us really an appreciation for like what's real, what's bullshit, if I can, I don't know if I can say this, what's real, what's not in this category, because there's lots of noise, lots of hype, lots of things that are not true, but also lots of innovation. So I think it's almost impossible distinguishing between the two, unless you're also building a company in the space and really have hands-on experience with it. And so I think our core thesis and core value prop is investing while building a company in the space is really maybe the only way, at least in our opinion, the best way to make good decisions and try to peak as well as you can. Otherwise, you just kind of gamble.
For I guess like for the space. So for example, you guys invest in a company called AlphaZ. Like maybe we could talk about like, why is this like robotic hands that's like, or like the robots are different than the existing companies in the market? Because I feel like coming from China, like I personally feel like a lot of these robotics projects are like already very advanced in the Chinese market. So like whether it's like the tiny like cleaning robot, like when you go to CS, there's like a robot for everything. So like maybe we could talk about like, how do you think about defensibility in the physical AI space?
Yeah. So what I said earlier, so even though we invest in robotics, we don't invest in any robots. We don't have any portfolio companies that are actually building physical robots, like and form factor, whether it's humanoids or quadrupeds, doesn't matter. So, and you're right. I actually think China, from a hardware standpoint, I also believe that China is probably way more advanced at the moment. Pure hardware.
Sorry, maybe I'm like very so I was like looking at this website, so like sorry if
so in case of AlphaZ, I'll explain. So they're building software products for robots, right? None of the robots you see there on their videos actually the robots they've built. That's the robots they've installed their software on. And in fact, some of those robots happen to be Chinese robots, like Unitree and some others. So, but specifically you asked about AlphaZ, so I'll explain that one. So AlphaZ is building really an autonomy stack that's in theory, like not even in practice, like hardware agnostic. They can deploy on many types of robots. And they're really building an autonomy stack that enables robots to be able to deploy robots in production in an autonomous way. And the most important thing is when you deploy stuff in production is figuring out the context. For example, if you're building a robot that's patrolling, I don't know, dust patrolling or some kind of, let's call it patrolling parking lots or patrolling buildings, whatever it is. Patrolling one building is very different than patrolling a different building. The context is different. How you make decisions are different. What obstacles you might face, how you execute the mission is very different. So what AlphaZ is focused on building an autonomy stack that enables deployments of those robots in a diverse set of environments in the context of a specific environment. So it's a purely software company. They're not building their own hardware. And that's a great example of a founder that had just been building in the space. The founder was a founding engineer at a company called Field AI. And just has tremendous kind of market fit. Has done an extremely good job. Like it's actually one of our fastest kind of 0 to 1 robotics companies in our portfolio. Companies only a year old, a little bit over a year, and have achieved tremendous amount of traction in a very short period of time, which is unusual in the robotic space because things take some time in robotics.
I guess how do you evaluate the go-to market or like the market adoption from these like I guess like robotic software?
Yeah, it's early days. There is really no market for the stuff yet at scale, right? The market needs to be created. And so in case of AlphaZ, we were pretty excited because in a very short period of time, they've been able to actually build a pipeline and robots and customers that actually have their robots in production because they were extremely focused on type of vertical they went into and really solving a low-hanging fruit pain point, specifically in like inspection and security vertical. And really over-optimize their products to execute really well in those environments, and have been able to get pretty good distribution in a relatively short period of time within that vertical. But yeah, I think generally go-to-market for robotics is still very early. It's still very unclear how the space is going to evolve. Like, is the space going to be more like, I don't know, like computer market, where there's a clear decoupling between software providers and hardware providers, where the companies who build computers generally do not provide their own software, like Microsoft and things that go on the top of those computers. Well, contrast this with smartphone market that evolved differently. Smartphone market tends to be a bit more vertically integrated, where it's a hardware and software providers, right? So which way robotics are going to go, I think we don't know yet. Right? Is it going to be more like cars, where there's lots of different cars, and then software providers on top of that? So yeah, we don't know. I think that's going to be where it's going to play itself out over the next decade. But we do think we have this idea that we don't believe. So personally, we don't believe it's going to be like one form factor. We don't believe it's going to be like humanoids doing everything. We think there's going to be like explosion, like Cambrian explosion of all types of robots, all kind of form factors. The things don't look like robots, but really robots. And like that's our thesis on this.
Why not?
Why not what?
Why not? Like, why don't you believe in like the full-on like humanoid robot thing?
Yeah, why not humanoids? Because the best analogy I have that's kind of fun. So the thesis for humanoids is that the world was built for humans. Hence, if you're going to build a robot, they need to be like in the human-like form factor to operate in the physical world, in the real world. That's the thesis. And certainly they'll have a role to play. There's going to be humanoids doing some things. I think we are very far away from having a general purpose robots doing general purpose things at scale. I think we're a decade away from that actually happening. But the analogy I give is, if you look at very early days of cars, I don't know if you know, but the very first early patents on what the motorized vehicle is, the very first patents were actually showing a mechanical horse.
Mm-hmm.
It was actually done in the form factor of a horse with engine. Well, it was like a engine inside. Like, you can go back and Google and find some patents people filed in 19th century of motorized horses.
Mm-hmm.
And the idea was, well, the world was built for horses. So if you're going to make them motorized, if you're going to create this motorized vehicle, it kind of needs to be like a horse to operate in the world that was built for horses, right? So that obviously did not play out this ways, and so I think robotics are going to be somewhat similar. Just because the world was built for humans, the world will evolve with robotics, and I think there's going to be diversity of form factors.
I wonder, so like, since like you guys invest in the software space of the robotics companies, like what are beyond like, obviously we just talked about AlphaZ, but like beyond this category, like what are some other category that you're excited about in the software space? Because I feel like when I go to these like demo days, a lot of people are building for example, like the software for like the real estate industry. So for example, like there's a drone that's kind of like circling around your building and then like taking measurements within your building or like outside of your building. That's like a popular use case I've seen. But like, I don't know if there's any like other market that you personally felt like there will be a lot of like money that like coming through the market that's in the robotic software space.
Yeah, another category we're pretty excited in kind of physical AI space, which is kind of related to robotics, but not directly, is smart glasses. Like, I don't know if you've tried like earlier versions of like Ray-Bans and stuff like that. But there, I actually believe that like over some period of time, call it 10 years, all glasses are going to be smart glasses. Like the reading glasses, just sunglasses, like all glasses are going to be smart glasses. Like you're going to go and get your prescription filled for your glasses, and chances are it's going to be like a smart glass. Like, it's going to have some cameras in it, it's going to have some intelligence in it, it's going to have some capabilities in it. So yeah, Airwave is a great example of that, which I'll come back to in a second. So we have a thesis that like all glasses are going to be smart glasses over some period of time. And then if you think what type of applications that unlocks, both in the consumer space, but also even more importantly in the industrial space. So Airwave is a great example, since you put it up. They're focused on building solutions for people wearing smart glasses in the field. So frontline technicians
Mhm.
that are servicing a physical world,
Mhm.
and they already wear goggles, like wearing like safety goggles is just like thing they do normally. And
Mhm.
so if you equip them with the smart safety goggles,
Mhm.
it unlocks tremendous amounts of productivity.
Mm.
That just was not. It actually gives you access to. It allows you to capture data that was never been possible to capture before. You capture physical data of people actually performing tasks in real life, and things you can do around quality assurance and quality control, and also ability to share that knowledge with other people. This is the data that's never really been captured before. Usually, you send your technician to fix like a piece of equipment. They go there, they fix it, they come back, say they fixed it, they put some notes, and that's all you got. Ability to capture all this data that was never captured before,
Mm.
and type of use cases unlocked. I think that surface area is just unlimited, and so we're pretty excited about companies that kind of build in that space.
What is your, I guess, like, what is the go-to-market strategy for something like this? So I feel like selling to the technicians, they probably, I would assume like that the glasses may cost like it may not be cheap. So like how like what is a go-to-market kind of like
You'd be
look?
surprised. I think like for example, in case of Airwave, they're able to build these glasses for very low cost, like hundreds of low hundreds of dollars, like $150, $200 is the cost of this thing. So you can actually, and it's only going to like improve. And if you think about the type of equipment that a lot of these folks serving and
Mhm.
the type of equipment that produce, it's actually a very, very manageable. That's not a barrier if you deliver the value. For example, like a typical, very obvious use case is all things that have to do with inspections. In most of the industrial world, there's always some kind of inspection happening on some kind of piece of equipment. And usually it's a guy with a clipboard, just goes, and fills out the little check marks on the clipboard, and then they give it to somebody who enters it in the system or whatever. If you can just automate that process by just walking around it with the smart glasses, and automatically on the back end, the report gets created. The amount of efficiency that brings is well justifying spending $100 or $150 on pair of glasses.
So for Airwave, like do they kind of like create the glasses or like do they just like do the software on top of the glasses?
Yeah, they partnered with some glass manufacturers
Mhm.
to create glasses to their requirements, but they're not themselves building glasses. They partnered with people who build into their requirements. But what they do is offer software on the top of those glasses. And eventually, there's like once diversity increases, they can just focus on software. They don't actually need to always be to jumpstart the market. They want it to be a kind of a out of the box end-to-end experience. And like they've been receiving the demand. There's so much interest in this across kind of ecosystem that it was like very impressive to see.
I wonder as for like, do you consider this like as a consumer product or do you consider this like B2B
This
SaaS?
is a B2B. No, this is a B2B product.
Since like are they selling to individual, let's say like a plumber or like a real?
No, they're selling to people that service your industrial, I don't know, AC equipment or elevators, right? Or people, for example, who service elevators. Right? Those tend to be mid-sized, large-sized companies that have usually a very large number of technicians, and what they offer is ultimately a productivity increase. That was like not even both productivity increase and data and creating data sets and data assets. They were not even possible before. And then you can actually also like draw the line between that and how this data can be used for things like robotics training.
Got it.
Now we have a POV data of people actually doing tasks, very high value tasks, not like cleaning dishes or washing dishes, but really high value tasks.
Mhm.
And the value of this data is immense.
What do you think is like the moat of company like this? So I feel like to build the software, there must be like I think like I guess like a lot of people could potentially build the software and like how I guess like what's your thought process on like picking among the companies? I feel like this is a niche product, so like maybe this is not necessarily the best example, but like I guess like there's other. So for example, you guys invest in Clario. So I mean, correct me if I pronounce it right, but like, so I feel like in the facility space, there's like a lot of innovation that's coming up. So I've seen like different companies that are doing, scan or like these like kind of like observe or like kind of like the smart warehouse kind of companies. Maybe we could talk about like how do you find the company to like how do you evaluate something like this?
Yeah, I think your question about moat applies to many different things, but I think you're asking specifically on kind of this physical AI, spatial intelligence space, right? That's kind of specific.
Yeah.
Yeah, I think it's still, to be honest with you, I think the time will tell what the real moat in these businesses is. Because again, the category is just so early, right? But the thesis is that there's kind of an obvious data flywheel in those businesses, right? Because as you work with customers, you collect the data that improves your algorithms, that makes your product better, that allows you to get more customers, and having advantage, kind of time to market advantage, and be early in the space allows you to create a data moat. That's very unique. Now that's a thesis. We'll see what happens. Now, I could argue in many other categories that people claim there is a data moat. That like data moat really doesn't exist. It exists in theory, but it doesn't exist in practice. And really, ultimately, the moat comes from like anything else. It's just building a better product, executing 10x better than the next guy, being better at serving your customers and finding your customers and serving them. Like I actually think, I could give you some like VC-like answer on data on moats and stuff, but I actually think moats are super rare. And ultimate moat is just being better at doing something than the next guy. Just being a little better at servicing your customers, being a little better in building, iterating on your product, being a little better in recruiting the team. Like that's the real moat, I think. Almost any business, because with unlimited amounts of time and money, anybody can replicate anything, or try to at least. But it's really there's doing it better. It's a very non-satisfying answer. Because I wish there was some kind of magical thing that's like you can just point to and say, "Oh, well, look at this moat." But I think it's really rare in most companies. Just being honest.
For sure. Well, I want to be mindful of the time. Maybe we do one real question and then 1 minute fire round. One real question is like, what's your, I guess like, what would you say would be the biggest keyword for like 2026? I feel like 2025 is kind of already AI agents, but like, what's your prediction for 2026?
Yeah, like I don't know if you listened to the podcast with Andrej Karpathy. I quite believe is like probably the most objective voice in AI, like in terms of like somebody who actually A, knows what he's talking about, but B, is not incentivized to overhype things or bullshit things because he's not working for some big lab or whatever, trying to raise a bunch of money. So he's the most objective. And he said like when people talk about a year of agents, he thinks that's like just hyping things up. It's not a year of agents, it's a decade of agents, at least. Like that's what he said. So I was really skeptical of people calling 2025 a year of agents. Rightfully so, because we still don't really have them in production in real life. And I think it's still going to take a few years before they materialize in a way that creates real value. So I'm really hesitant about doing this kind of, I don't know what you call them, the one word themes, because none of these things take a year. And nothing happens within a year. I think, and so I'm usually very hesitant about like putting these labels on. Well, this was a year of agents. Well, we still don't have the agents, so maybe I guess next year is also a year of agents, and probably a year after that will also be a year of agents, and many years after that. So yeah, I'm not gonna. I don't think I'm gonna come up with something that's like meaningful. That's like not BS. So
I like the decade of agents saying. Why don't we talk about like okay, 1 minute fire run. What's your favorite book?
My favorite book? Oh, that's a really good question. Trying to come up with one. I really like the book Outliers.
Wait, sorry.
Outliers.
Outliers. Oh yeah. I was like,
and this idea that it goes back to your question: is it a year of agents that you need you need to put the real cycles into anything to try to even have a chance to be good at something. And I think that's true on the individual level. That's also true on like a company level or product level. So I think that was one of the books that I thought had a lot of impact on me.
Love that. Who would you invite to a dinner party?
Who would I invite to the dinner party? Alive or dead? Or it doesn't matter.
It's your party.
Party. Oh man, that's tough one. That's lots of options. Lots of options to choose from. I'd love to chat with Steve Jobs.
Love that. That's a classic one.
Yeah, it is. I know it's kind of cheap, but there is a reason why it's classic, because it's good.
For sure. Who made the biggest impact in your career?
Oh, that's an interesting one. Lots of people actually had different types of impact, both good and bad. There were also people who maybe had what seemed to be in the short term negative impact on the career, but over the long term, it was a great lesson. And so I don't know. It's hard to pick any one person, but I can come up with a dozen examples of people, both good and bad, that people that at times seemed like were very supportive, but also people that at times seemed like not very supportive and almost like anti-me. But that was also a key lesson to like take and learn from and improve. So both things had a massive impact.
Where can we find you outside of work?
Can you find me outside of work? You can find me in the mountains. We're pretty deep into skiing. I have two kids, 2 young kids, so you can find me with them doing the kids stuff. Those are the things.
Amazing. Igor, well, thank you so much for coming on the show today. It was such a masterclass in AI robotics and AI for good.
Awesome. Thanks, Grace, for having me, and hope this was useful for the audience.
Amazing. Let me quickly end stream as well.